Good morning, hello and welcome. You're watching Buy Now, Sell Now on ET Now. My name is Alex Matthew and this is a bit of a curtailed show, and you know exactly why. Because if you've been watching the channel, you know that the Monetary Policy Committee presented its outcome of the meeting that it conducted over the course of the last couple of days. And in fact, they decided to hold on to the policy rate. They decided also, and very critically, to say accommodative. And what's more, the RBI governor said that that accommodative stance would stay for as long as needed. And that came as music to the ears of market participants, because that indicates that the RBI governor and the Monetary Policy Committee as a whole is quite committed to supporting growth for as long as required, especially in the context of what you're seeing in the recent past, which is that you've seen a surge of COVID-19 infections and perhaps also the likely reimposition of lockdowns that are underway. All right, so let's also very quickly take a look at what else was announced. Very significantly for the bond market, you have a GSAP or a GSEC acquisition program that was introduced by the RBI, that will be introduced by the RBI, that has a mandate of 1 lakh crores worth of purchases through open market operations in the first quarter of the financial year, which will definitely support bond yields. And you see that the yields have actually come off. They've softened further in today's session as well. They have over the course of the last couple of days. What else? You've also had the announcement of 50,000 crore rupees worth of support that will be provided in this financial year to NABARD, the National Housing Bank, as well as SIDBI. You have payments banks that have the deposit limit hiked, and you have a panel that will review the working of ARCs. Let's very quickly take a check of where the markets are right now. Equity markets looking buoyant after the RBI Monetary Policy Committee's review. You have gains of about 200 points for the Nifty. You have just about 600 points gains for the Sensex at this point, and most of the participants of the Nifty 50 gaining. The losers, in fact, or the declines, even those, they have their losses that are limited at this point or capped at this point. Significantly, the Nifty Bank is gaining about 1.4, 1.5% or thereabouts in trade, and all of the other sectoral indices also doing quite well. All right, now we've been tracking the government's PLI schemes, that is the production-linked incentive schemes, and there is quite a bit of buzz and interest in the market for those. And we're in fact going to be speaking to Dixon Technologies' Atul Lal, who is the managing director of the company, because the company has signed an MOU to get into a joint venture with Bharti Enterprises with the intention of participating in a PLI scheme of the government. Thanks so much for joining us on the phone line, Mr. Lal. Good morning to you. Can you take us through what the intended outcome of this joint venture is going to be? What is the ambit that has been discussed with Bharti?
So we are entering into a joint venture with Bharti Enterprises. So for Dixon, it's a very major step forward. And we'll be pursuing in this joint venture our application for PLI for the telecom sector, which covers IoT products, modems, routers, various other telecom products, which we propose to manufacture in this joint venture. So for us, a major step forward, it's an extension of our electronics manufacturing. This is a core business, and this takes us into the domain of telecom products, which is a new domain for us, linked to our core. And undoubtedly, Bharti is an iconic organization. It's in the forefront of telecom sector. And we really value and look forward to make this partnership a big success.
Okay, I do want to understand a couple of things though when it comes to this joint venture and the PLI scheme. What are the timelines that we're looking at in terms of operationalizing it? Are there approvals that you need to seek, and how soon do you see that coming to fruition?
So we see the definitive agreement should be signed and operationalized in a month to 45 days. And we'll be submitting this application under the JV to PLI. Hopefully the PLI approval should be out within this quarter itself. Now we're going to be buying into some existing assets of Bharti, and when the operationalization of this JV, we feel should happen within 3 to 4 months' time. So we're going to be fairly fast.
Understood. Now, you did mention that Bharti Enterprise is an iconic name, and certainly that is the case. But what do they bring to the table? You have majority ownership, or you will have majority ownership in this joint venture. What does Bharti Enterprises bring to the table?
So in Bharti, we have a potential customer. Obviously, it's going to be done on an arm's length basis. So we create value for Bharti, and in Bharti, as I shared with you, we bring in a very large customer and also a very large relationships on the supply chain side. And Dixon becomes a manufacturing partner, and that's the whole focus of this particular JV. Because Bharti itself is a very large consumer of telecom products in Airtel.
Understood. Mr. Lal, you also have several other customers in the space that you're operating in, and as I understand it, the products that you've mentioned, you have quite a few other players that you cater to as well. What is the size of the opportunity that we're talking about? If we're specifically talking about this PLI scheme and the joint venture that you intend to get into with Bharti, what is the size of the opportunity here?
So that number crunching is still being done. But please be rest assured that the relationship is not only going to be confined to the telecom PLI. It's going to be for other products also acquired in the telecom sector and by Bharti as a group. So I'm not in a position to share with you at present numbers, all the more because I'm in a silent period. But it's going to be a large opportunity for this.
Understood. Just one last question from my side, Mr. Lal. This is with regard to the cost increases that we've been seeing, and this is something that the RBI Governor alluded to as well. We're seeing international rise in commodity prices. Is that something that you're facing as well? And are you passing that on? Are we looking at price increases at this point?
So price increase is definitely a challenge. We have entered into some kind of a super cycle of commodities across the nations, across the metals. Now, Dixon has two kinds of business models. One is the OEM business model, which is on a prescriptive basis. But a very large portion of our revenue. So in this particular revenue stream, we have been able to pass on completely because that's the way the contracts are structured. And the other revenue stream is the ODM, which is Dixon's ODM design solutions. Now, in that, in one verticals, we have been able to pass on almost completely. In other verticals, there is a lag of a quarter or so, but in the current quarter, we are fairly confident that we will be able to pass it on.
All right, Mr. Lal, on that note, thank you so much for taking the time and for speaking to us. Wish you all the best for the opportunity that you intend to make use of. Let's go back to the markets on that note. In fact, I'm joined by Kunal Bothra now. And Kunal, it's looking like a breath of fresh air based on what we've seen in the past few sessions. The market's taking the policy decision within its stride, of course, and it's quite happy, I think, with the intention of the RBI and the Monetary Policy Committee to focus on growth going forward.
So absolutely, Alex, I think the market has reacted quite strongly, quite well, and I think this was a much-needed proper relief rally for the markets because in the last couple of days we've had a bit of a mix market reaction, indices moving in a bit of a choppy range, stocks you saw a lot of momentum coming by, but then with the index not doing pretty well, it becomes a bit circumspect that because short-term traders, they generally look at the index moves before they tend to carry forward positions. What this move today could probably do for the index is add a lot of booster to the sentiment from the markets. Now, there are two very important technical points which one needs to watch out for. One of them is that the Bank Nifty has finally managed to break past and cross about the 33,000 mark or 33,000 hurdle, which was a big resistance for the index Same was for the Nifty 14,800. So since last 2 days, I was highlighting that if there is a breakout of both of these levels together, then I think it should result into a very strong, uptrend or a resumption of uptrend for the indices. So I think till the time we close above this, and assuming if we close above this level, then the probability of the trend picking up is far more higher on the index. The second, the most encouraging point, at least as a derivatives or in data point, is very, very important, is the premium on the Nifty futures, which is coming back today. So in the last couple of days, when the market has sold off, the premium from 105 points on the Nifty futures had dropped off to almost a 25 points. That premium has now come back to a 75 points. Now, premium coming back on the index is generally an indication that the markets participants are building in more long positions, and they are ready to pay a higher premium to take those positions on the index future. So I think with that setup, with the technical breakouts, with the premium setting up as well, with the stock specific action, large cap names coming quite strongly, I believe that this is now indicative of a structure which has improved quite well for the index. So I for one believe that over the near term, there is a possibility that the Nifty could scale past about that 15,150 level, and the Bank Nifty could make a comeback towards 34,500, 35,000 levels.
All right, those are the significant levels to watch out for. Do want to mark what you're seeing on the bottom of your screen there, and the fact that the rupee is now at the lowest level since the 27th of November. It has weakened in today's session. Let's also get in your views, though, Kunal, on what our viewers can look at as in terms of high risk and low risk ideas for the day.
Alex, in the morning before market on the morning show, I had given a couple of banking names, and both of them were completely contrarian, ICICI Bank and Canara Bank. So, with the theme that I'm expecting a contrarian recovery on the banking index. So that has played out pretty well. Now, I believe I'll focus more on individual stock themes. So two buy calls, which I would want to suggest at this hour. The first one is about Pidilite Industries. It's a very interesting chart because when you look at it over the span of the last 5-6 months, the stock had gone through a rally from 1500 to 1800, 3 months of consolidation, and then finally a breakout of that 1800 mark, 1820 mark of this consolidation. So the last 2 days have been very fruitful for Pidilite. Yesterday's momentum was very strong. I believe that this is a sign of a very strong uptick, probably at least a 50 to 100 point uptick from current levels on a positional basis. Is a high probability trade for Pidilite Industries. So would suggest a buy with a target of at least 1950. Stop loss could be kept at approximately 1860 mark. The second is from the mid-cap name, Rain Industries. Now, the stock which had done exceedingly well in January till January 2021 remained a bit low, managed to go through a corrective phase, but again making a very strong comeback. What's very intriguing about the charts for Rain Industries is the strong volume push which you've got in the last 2 days. So yesterday the volumes were almost at a 5-day high or a 5-day average high. And today the volumes have already surpassed yesterday's volumes. So that itself is an indicator that there is a very strong demand which is coming across for Rain Industries. Would suggest a buy with a positional target of at least 175 to 180 range, and stop loss could be kept at 157.
All right, Kunal, thanks so much for joining in, for sharing your views. Pleasure speaking to you as always. We're slipping into a short break at this point, but stay with us. More on the other side. Welcome back. You're watching Buy Now, Sell Now. Now, it was not the best debut for Barbeque Nations on the stock market, but since then, it has actually managed to gain significant ground. In fact, it hit an upper circuit and is currently trading just around that mark, that upper band of 590 or thereabouts. It's trading just about close to that mark. Remember, it hit the exchanges today. It was listed today, and it is owned by Barbeque Nation Hospitality. It is a range of casual dining restaurants, and it also has International Barbeque Nation restaurants. It owns and operates the Toscano restaurants and UN Barbecue as well. Let's move on now and take a check on metal counters, and they have been in focus over the past couple of months at least. And in fact, they're one pocket of strength that you've seen even on the days in which you've seen broad-based weakness. Jayesh Kilnani has this ET Now insight on the metal counters.
The Nifty Metal Index hit an all-time high level. Now this comes on the back of a 7-day gaining streak during which the index itself has gained about 15% and also posted the longest winning streak that we've had since 11th of August 2020. Now if you have a look at the last 7-day rally, there have been a lot of stocks that have given you more than 20% return. For instance, you have SAIL, JSPL, JSW Steel and Tata Steel, along with Adani Enterprises that make it into the Nifty Metal Index. Now these stocks have given you returns of anywhere between 20 to 30% each in the last 7 days that I'm referring to. Other stocks like Hindustan Zinc, Nalco and Hindalco have also given you double-digit return. Now despite the up move that we've had in this sector, valuation picture looks on the reasonable side. Most of these stocks trade very close to their 5-year average price to book value and not at exorbitant levels as well. So if you have a look at JSPL, Hindalco along with Vedanta and Tata Steel, their estimated price to book value stands anywhere between 1 to 1.5 times forward book value, while their 5-year average stands anywhere between 0.5 to 0.9 times, with the only exception of Steel Authority of India that trades lesser than 1 times book and the 5-year average being about half a time price to book value.
All right, you'll find a lot more like that ET Now insight over the course of the day, but that's all we have for this edition of Buy Now, Sell Now. It was a pleasure bringing it to you. Do stay tuned. This is ET Now.